Good morning, folks. Happy Friday, everyone. I just want to touch on a few things that happened this week with regards to the economy, specifically in the US. So on Wednesday, the FOMC announced another 0.25% hike. That was no big shock. What they did say, though, was a little surprising to some, is that they're now in a wait and hold kind of pattern. They are now data dependent. They are keeping an eye on financial stability, specifically with the banking sector, as well as keeping an eye on inflationary pressures, as well as keeping an eye on the tight labor market. So they're looking at all three of those things, and their goal is trying to get inflation lower, but they are well aware of the risks that are starting to become more and more each passing day with regards to the banking crisis south of the border. So that's something that everyone's keeping an eye on now. With regards to the banking crisis specifically, earlier in the week, it was announced that JP Morgan was going to buy First Republican Bank. Again, no big surprise, that had been heavily rumored. Since then, the chairman of the FOMC announced that he believes the banking sector is now sound and resilient. Obviously, he's full of crap, because since that announcement, some of the banking stocks in the US, specifically the regional banks, are off 30 to 50%. PacWest being one of them. Another bank that TD Bank was trying to buy down in the US, TD backed out of that deal this week, and that stock is off at least 30%, at least it was yesterday. So that sector continues to trade lower. It's heavily under pressure. The banking crisis is still ongoing, and what it will cause is a tightening of credit, tightening of lending, which will eventually slow the economy, and that's what the central banks are keeping an eye on. In the US and Canada today, we got employment data. Employment continues to be very strong, no weakness there. However, I should point out to you once again that employment is a very lagging indicator. It is one of the last economic indicators to crack. So I would not look at employment data as where the economy is going. It's more of where the economy's been. So as we head into next week, I think the market's going to continue to remain focused on this banking crisis and any signs of tightening in lending in the US and how it's impacting manufacturing in the service sector. All right, everyone, have a great weekend. Bye.